Hello and welcome to the Property Talk podcast from RWinvest, bringing you tips and advice on all things property investment.
Okay, so today, Bradley, we're going to be talking about the B word.
Brexit.
Brexit, yeah. And as we know, we have now officially left. The UK's formally exited the European Union. We did it at 11 p.m. on January the 31st. Now, am I right in thinking there's a transition period until the end of the year?
That's correct, yeah.
Yeah. So everything's pretty much as is until the 1st of Jan 2021. What do you reckon about the prospects then going forward? Do you buy into all the doom and gloom? Are you scared? Are you worried?
Not at all. I think the uncertainty and the build up to Brexit caused a lot of nerves, in particular world markets and investment markets. Everybody was sitting, waiting to see, but just deciding where, how and when was what they were waiting on through for the Brexit voting.
Yeah. And I think now that we've got that decision, I mean, just looking at some of the figures here, the latest Halifax house price index, I think, reported a 1.7% jump in sale prices last month. So I think really we're going in the right direction, certainly from what
Is that an average across the UK?
Yeah, I believe so. Yeah, it is. It is a complete average. So the market's been boosted, and following that logic, I think prospects do look good for post-Brexit anyway. I think with the uncertainty easing, I think that's fair to assume that volumes of purchases are going to increase. I mean, would you say the same? Is that what you found from experience from December till now?
Completely, yeah. I think it felt like there was a lot of people, as I say, just waiting to see what that outcome was ahead of making decisions on where and how to spend their money. I think our January has been incredibly busy. I think the discussions we're having with clients are now open and spending again, certainly. And I think only now, I guess in the coming 2 to 3 months ahead of the end of the tax year, we should start to see some big numbers coming back on for people spending in the country.
I agree. Now, again, looking at a report here from Savills at the end of 2019, they've had a look at some of the regional winners and losers with this whole Brexit scenario, and I think their results are pretty much spot on with our experience too. They've got London as suffering pretty much, and the Northwest doing really well. Would you agree with that, Brad?
I mean, that's exactly what we said we expected to happen. The capital is always damaged the most by things happening in the Commons. These things then kind of trickle up into the northern cities and I guess the southern cities below London as well. The north, I think we get a little bit of protection from a lot of those kind of things. I think, you know, when we've seen these house prices staying a little bit more stagnant for a month or two, I think we've seen the bigger jumps in the north and the northwest, certainly. I'm sure you'll have some form of stats to back that up for us, do you, Craig?
You know I love a stat. Well, the one for me is all about going forwards. I mean, it's easy looking back. We can see what's gone in the past. But again, this report from Savills, they reckon over the next 5 years, London's maybe only going to nudge up about 4%. Whereas I think the Northwest is 24%, and they're being conservative.
Doesn't surprise me at all.
No, it
absolutely doesn't surprise me at all.
And one of the key issues, the main reason they cited for this was affordability. So it's the ratio of wages relative to prices, and we all know that Liverpool is it the second most affordable city in the UK?
Second most affordable in the UK right now, after Cardiff actually.
Yeah.
6 times average earnings in 2007 for wages down there as well. 4 times in Liverpool as a city, so we're the second most affordable city in the country to buy into right now.
That's it, yeah. I mean, that particular bit that you touched on there from the Home Track reports, I remember reading that a couple of months back.
Great statistic.
It is. I mean, how can property be getting more and more expensive year on year, and yet it's becoming more affordable? I mean, it's obvious. Wages are growing here faster than pretty much anywhere else, and I mean, would you say that's a good sign for buying? Would you buy somewhere where wages are growing rapidly and property prices as well?
100%. I mean, the two things go hand in hand. I guess if you're looking to buy investment properties, you're looking to get bums in the beds, and you're looking to try and maximise the return you can make from those beds. I guess if you're in a city that has any level of undersupply, then you can kind of dictate your prices for trying to hit the ceilings of what people are willing to spend on.
And just looking at these figures now, so we've got Liverpool 4 times average earnings, this is property average prices, Manchester about 6 times average earnings, London 13.5 times average earnings, so you can see why that's taken the biggest hit with all of the uncertainty. Going forwards, if you were looking for a specific city to invest in, bearing in mind we know the Northwest is going to be the big winner out of all of this, where would you choose and why?
For me, I think right now I'd be looking at cities like Liverpool and Manchester.
Okay.
I think those two cities are, both economically in boom periods, big sums of money being spent by a lot of kind of private investment coming into both cities, massive job creation as well, which I think is really, really important as we're seeing a lot of these issues in London. And a lot of companies moving their kind of operations away from the London rental rates and the London staffing costs. I think all of a sudden, Liverpool as a city now we're home to. I think Sony have set up a HQ here and a variety of other firms. And I mean, I think that should lead to higher average wages in the city, higher disposable incomes, more money to spend on better quality accommodations. And whilst we have a genuine undersupply in both cities, but Liverpool in particular, I think, we can, or the owners can dictate the markets a little bit more as to what they want to put the bums in the beds.
I'm looking at some more data here as well from Hamptons, and I believe that there are now record numbers of young people leaving London, basically to buy their first property, to get a job outside of the capital, because things are more affordable. And the figures here, I mean, in 2009, the average age of people leaving was 47, and now it's 39, so it's come down quite a way. And I think 13% of buyers leaving the capital bought in the north. So it tells you everything you need to know about the market, doesn't it, really?
For me, I think that can kind of thread into the student retention rates that we saw. I think Manchester had the highest student retention rate in Europe last year. People would historically go to university wherever in the country. If they wanted their high-flying job, they moved down to London, and that's where they kind of get themselves set. I think now that we have more opportunities coming in the north of the country, all of a sudden people aren't just using the universities to study. The high-flying jobs are now here. But not only that, the cost of living is so much significantly lower that people can have a better standard of living on slightly lower wages here.
Definitely. Now, you mentioned a really good word there, opportunity. And for me, if somebody said to me, sum Brexit up in one word, in the realms of investment property, opportunity is the word I'd use.
Couldn't agree more.
The deals we've seen, the prices, it's been better than I've ever known. Would you agree?
I think it's a buyer's market right now. I think at this time, number one, whilst the markets had been slightly less stimulated than maybe in 24 months ago at the same date, I think developers are offering more freedom and more room for negotiations on things. And I think buyers are looking to try and push deals out still. So it sits very nicely in that mid-ground, I guess.
Yeah. I think for me, this 1st of January 2021 date, it's a bit of a deadline for me. I've been thinking to myself, this is the last chance, that's the cut-off to get a really good deal. While everybody else is worrying, the serious guys, they invest and take advantage and capitalise on it. So I think between now and then is the best time to be buying. Thereafter, when the certainty's back, naturally prices are going to go up.
One of the things that we expected to see, around the Brexit time, and it was something we were discussing with a lot of clients pre kind of Brexit decision made, was just trying to push clients over the line ahead of the announcements to try and take advantage of the kind of pound and the dropping rate of the pound. I know it's something that we've spoke about quite extensively, behind closed doors, and I think even though the value of the pound is still sitting maybe lower than it was, like I say, 24 months ago, I think we're going to see sharp increases. So for the overseas guys looking to take advantage of the markets here, I think kind of now is very much the time for them to be buying. And I think we've seen that certainly in the past couple of months, with now the buyers starting to churn through and just take advantage. I know you had some stats the other way. I'm sure you're going to hit me with them, are you?
No stats and no predictions on the value of the pound, I'm afraid. If I could do that accurately, I'd be a wealthy man. But I think on the whole, I think from this point onwards, the pound's going to be fairly stable. But the big thing for me, the big variable, is any future trading arrangement. And I don't mean with Europe, I mean with anybody else. And who knows whether the UK could strike up a deal with the Americans or anywhere else in the world for that matter. What effect will that have on the UK economy? I mean, it could be better than everybody thinks. We sort of focus on the negative. Would you agree?
I think as the nature of the human being is pessimism, right?
Yeah.
I think we always look for worst case scenarios, and we always look for a lot of these negatives. But I think there's a lot of positives that can be taken from it, certainly.
Yeah, definitely. Well, for me, I think the best thing to do, if you have any spare cash lying around, so to speak, the best thing to do is to get it tied up in a tangible bricks and mortar asset, something which is going to increase in value and offer some kind of a return. I mean, I can't think of anything more secure.
Yeah, I would agree entirely. I mean, for yourself, I know I said kind of Liverpool and Manchester is somewhere where we're really focused. I guess anywhere kind of north of Birmingham right now certainly is where we should see the more ease of effects. If you were putting your money somewhere right now, where would you be looking to put it? Where do you feel is the safest microeconomy to put your money in the UK?
Well, it's got to be northwest, just based on the objective data we've got. But of the two big cities in the northwest, Liverpool and Manchester, I'd have a slight lean towards Liverpool purely because of. Have you heard of what Peel are doing with the Superport just north of the city?
Yeah, read some bits.
I think that's almost £1 billion worth of investment. They're getting 8 ship-to-shore cranes, and I think this is going to be a big gateway, a Mersey gateway, for want of a better phrase, into the UK. And how important is that going to be for foreign overseas trade post-Brexit?
Yeah, I think we also have massive jobs coming through that project, if I'm not mistaken, 18 or 20,000 jobs coming in from the ports as well.
Yeah, I can believe it. So
for the buy-to-let market, I guess there's going to be a load of new skilled workforce with a good enough level of wages to be able to afford to be renting in the city. A lot of the guys, especially dock workers and port workers, they'll come into one city, work for 3 months, 6 months, short contracts. Can be absolutely ideal for renters for renting on apartments, I think.
Yeah, we see a lot of maritime engineers coming into that city in particular. But again, another big driver for me, and you can make this really, really simple and focus on supply and demand. If you've got a city where a population has doubled in a decade, I mean, that's really big staggering growth. With some of the most affordable properties in the whole of the UK, it's a bit of a no-brainer, isn't it? We can see that market's only going to go one way.
Mortgage rates are going to massively dictate the property markets over the next 24 months as well. You'd expect the government are going to give some relief on that, would you?
Well, do you know what? It's strange. I think we could do with it, but it looks as if, they're at record low rates anyway. The Bank of England base rate, I think it's at 0.75 at the moment. So, historically, it's pretty low. I think interest rates are going to slowly increase over the next decade. So, really,
now's the time.
Now's the time. When they were saying the only thing that's going to influence things is either lower mortgage rates or improved earnings. Yeah, you look at that and you look at Liverpool, we know that wages are shooting up rapidly there, way outstripping appreciation in the property, even though it's 6% year on year. Again, it all points towards Liverpool for me. So if you're asking me, Bradley, where I would put my money, it's Liverpool all day long.
I'm going to ask you another question, Craig. So I want you to put yourself into the shoes of the guys on the other end of the speakers listening to this. If you're a prospective buyer,
okay,
and you're slightly deterred right now maybe by the idea of the UK's political situations, waiting to see a variety of the outcomes, and you're someone who's maybe slightly nervous to put your money into the UK, what would you think is the single most important driver that could make you move your money here now, today, and not wait that period of time?
It's the uncertainty. So the thing that people are worried about is the big advantage, as counterintuitive as that seems, or as a paradox, if you like.
Makes perfect sense, actually, Craig.
As soon as we get certainty, you can expect prices to go up.
Well, as soon as there is certainty, because I think with anything, with investment, it's based around calculated risk, right? Mm-hmm. I think if there is no risk, anybody with any disposable income at all will be putting it straight into whatever they could to try and get it generating further incomes for them. At the end of the day, we all want to have more money than we have. That's a human kind of need, I guess. It's inbuilt into us, it's intuitive, right? And I think exactly as you say, whilst there is uncertainty in the markets, it's the time where you can get the deals, it's the time where the stock is available as well. There's so many exciting projects going on in the Northwest in particular right now, and whilst some of these other buyers are kind of resting on their laurels and waiting to see exactly how safe they are before they decide to buy. I mean, by that time, property prices have jumped up significantly. Yields off the properties they're purchasing will decrease significantly from that. And then all of a sudden, what goes from being a great investment if you buy it today is a bang average investment if you buy it in a year or 2 years' time when the prices are already increasing and the yields are diminishing. And then it's on to the next city. So again, I think timing is everything with property, right?
Yeah, you're right. And I love a good proverb, and I'm going to give you one now.
I expected no less.
They say the best time to plant a tree is 20 years ago, and the next best time is right now. So yeah, I agree. Buy now, reap the rewards.
Incredibly zen. So thanks very much for listening to the Property Talk podcast, guys. I'm Bradley Ashley, and
I'm Craig Knight.
It's my colleague Craig Knight. All of our contact information is going to be in the footer and descriptions of everything for you guys to check out. So if you want to get in contact with us, ask us any questions, if you have any opinions, as I'm sure some of you guys do, please feel free to send them over and can give us something to talk about in the next debate we have.